Ted is frequently late on rent. His landlord warned him if he's late even one more time, he'll be evicted even if he eventually pays his rent. Ted can just not pay and get a free month before he has to move. But he can't find another place for the same price. So Ted decides to get a loan. Ted heads to the pawn shop, but they want something in exchange for their money. And they would give him 30 days to repay the loan, or he'd lose his item. Ted has nothing of value that is worth as much as the rent, so they suggest a payday lender. The payday lender wants a short loan term of 2 weeks, the same time it would take Ted to collect his next paycheck. Their interest rate is 17.65% over their 2-week term, but over a year that's almost 460%, and Ted isn't sure he'd be able to pay that back on time. So they suggest an online personal loan lender. Ted qualifies for a personal loan online, and their annual percentage rate is a lot more reasonable, only 24.99% for the whole year. But they require a minimum term of 36 months and charge a penalty if he tries to pay it off sooner. That means his interest is actually closer to 45%. Plus they require a minimum credit score of 670 and that Ted make the first payment immediately. Instead, Ted decides to ask his mom. She doesn't want anything in return. No interest, no collateral, no credit score. The only thing she asks for is that he pay her back when he can, and that he take her to the new Judi Dench movie. Ted loves Judi Dench, but hates going to the movies with his mom. In all cases, Ted needed a loan for the same amount, his monthly rent, and in all cases, the lender was willing to approve him if he could meet certain conditions. The pawn shop was willing to lend Ted some money if he could offer some collateral. The payday lender didn't require any collateral, but did require a shorter term and high interest rate. The online personal loan lender didn't require any collateral, and their interest rates were lower than some people's credit cards. But they did require a minimum term in order to make a decent profit, and a minimum credit score to prove trustworthiness, and that Ted make the first payment today. And Ted's mom didn't want any of that, other than Ted take her to a movie. And had Ted been willing or able to meet any of those conditions, they'd have happily lent him that money. Although all options were bad for Ted, not all of them were equally bad. But the lender isn't the only one able to set the conditions. Ted can set conditions too, because there are several lenders willing to let him borrow money. And while some lenders may have fixed terms, others may be willing to be more flexible. However, in all cases, the lender needed to be assured of 2 things. 1, that Ted's probability of repaying them would be high. And 2, even if Ted did repay them, that they'd get more benefit from lending to him than from not lending him the money. Lenders, even close relatives, don't let you borrow money unless it benefits them somehow. People don't do anything unless they believe it will benefit them somehow. In the end, Ted asks his mom if she'd be willing to go to lunch or dinner with him instead. She refuses and insists it's a movie with her or nothing. Ted scratches his head and decides to go with the online personal loan lender. He doesn't have enough to pay the rent, but he has enough to pay the first payment now. And with small monthly payments, he believes he can eventually catch up. Besides, to him, anything's better than going to the movies with his mom. What would you have done if you were in Ted's shoes? If you had to convince a stranger to lend you money, what conditions would you set to convince them that not only was it a safe bet, but they'd be better off lending you money than not lending you money?